non-equity ETFs, non-equity ETFs in smaller accounts. Pretty straightforward piece. By the way, we have a what's your assumption coming up, so we'll do a lot of trades at 8:40. But non-equity ETFs in smaller accounts. Let's see where this. By the way, this is a Tasty Bites segment, so it's designed for traders with smaller accounts. And you know what? We have some potential good news on the horizon for smaller accounts, which is it looks like FINRA, the regulatory body that kind of governs this whole agency under the SEC, it looks like after 15 years, we have finally convinced them to change the pattern day trading rules. And it looks like either later in fourth quarter of this year or sometime in Q1 or Q2 of next year, the pattern day trading $25,000 limit is going to go down to $2,000. It's essentially nobody's going to object to that. And it's going to change this game for smaller accounts because you are going to be able to get in and out of trades. You're not going to have to worry about this stupid, ridiculous, archaic, outdated asinine rule called pattern day trading. And so it will have a very positive impact on everybody. And it will be gone hopefully later this year or early next year. Huge shout out to JJ and to Scott, who have been working on this thing for 15 years. And finally, you know, we took the rest of the industry in with us, and we have worked to get rid of it. We have clearly been the leaders in pushing this change. And it pissed me off that the exchanges and other firms, it took them so long to get with the program. And it didn't make any sense. Anyway, let's do it. Let's see what we got here. So this is for smaller accounts. Recently, the implied volatility of non-equity assets has been coming in more in line with individual stocks. Smaller accounts are limited in what they can trade. So is there an opportunity in some of these assets? So we have on the screen in front of you, so you can see how they're all so highly correlated. Gold with NASDAQ, S&Ps, and bonds. I mean, you would think, how could these things be so highly correlated? But, you know, weird thing is they kind of are. Let's go. So you have the NASDAQ, the S&Ps, precious metals, and bonds. For small accounts, we like to trade underlyings that are ideally less than $100 so that our capital is not constrained to one trade. You know what's so funny about this is that in 2008, when we melted down, just because for some of you weren't around then, but in 2008, I think 65 or 75% of stocks were under $10.
Yeah, unbelievable.
You couldn't find a $100 stock. Now,
$100 stock was expensive.
Yeah, $100 stock was ridiculous in 2008.
And they would talk about why aren't they splitting it?
Yeah. Now you've got these stocks that, you know, $1,000 isn't too much. So It's crazy how things. Now it's hard to find stocks under 100. Back then it was hard to find stocks that weren't under 10. So our capital is not constrained by one trade. So what are the most tradable commodity and bond products available to trade that are liquid, cheap, and highly correlated to the most commonly traded ETFs? Let's take a look at the next slide.
It's going to be very good for smaller accounts looking for some diversification. To go to that email that we got earlier today, this is a good answer for it.
There aren't many ETFs with options that are highly correlated to TLT, but the gold miners and the utilities are somewhat correlated, and they come with a lower price. So in TLT, you know, it's funny. There back in the day there was TBT, but it's kind of like a 2 times leverage. It doesn't really trade. The markets are crappy. So there isn't really an alternative for TLT unless you want to trade /ZN. And for smaller accounts, /ZN, even though it's a futures product, I think the options there only require I think it's like $1,000. Can you check, Tony?
I'm gonna do that right now for you.
Yeah.
Mm-hmm. Go ahead. Talk amongst yourselves here.
And so I think, you know, ZN's an alternative there. GDX, XLU, which is utilities, and GDX, which is a relatively inexpensive stock, $54, and XLU is $84. Now, those are hard stocks to make money on, man, because I'm telling you, that stuff does not move the same. But they do have a reasonable...
About $1,500 to answer your question, Sadnov. Okay. I mean, even then in a smaller account...
Yeah, that's still a lot. I got it.
Yeah.
The bid-ask differential in all three of these stocks, GDX, TLT, and XLU, is about 2 cents, which means if mid-price is $1, you got to get filled, you got to sell it at 98 cents or buy it at 102. Mm-hmm. That's all that means. But you can see the BPR here. Tony just said in ZB, it's about $1,500 to a one lot. Well, the buying power of a 20 Delta Strangle and TLT is about 1,100, almost 1,200. GDX is 600 and XLU is 1,100. So it's not that far off, Tony.
That's right. And these are for naked options. And in a smaller account, you can certainly go out and buy those wings. Again, changes the strategy a little bit, make it more like an iron condor, but a synthetic strangle for your purposes. And you can use significantly less buying power than that.
So trading precious metals is actually easier than bonds in small accounts because there are multiple small priced ETFs with liquid options. So you have GLD, which is expensive, $3,000 for a one lot in there for a 20 Delta Strangle. But GDX, $381, GDXJ, $381, and SLV, $276. Now, before you get all excited, even though these markets are only 2 cents wide, and even though they have extremely high correlation to gold and to the precious metal futures, and even though their price is cheap, it's hard to make money, okay?
Yeah.
You know, you're squeezing a little bit here, but it's great learning experience. Crude oil is also at play, but the only viable alternative that requires less capital than USO is still /MCL, which is the micro crude oil options. And we can see here, we actually put it on the screen. The micro MCL is the micro crude oil futures and has a multiplier of 100. It is notionally similar to USO, but it's $668 for a one lot versus USO, which is $951. And this is just a good, it's a 99% correlation. The bid-ask differential is the same, and it's just an opportunity to just show you something that's more capital efficient.
Yeah, and you said the price is $100 per point, which is a lot more what smaller accounts are looking for in equity stocks. So MCL is a good choice, I think, if you look at trade oil.
100%. Let's go, and I mean in the bonds,
probably better than USO in my opinion.
Oh, 100%. But also in the bonds, they didn't put it up here because they don't trade much, but there is a bond symbol called 10Y. And you can't really trade 2YY, forget that. But 10Y, you can trade the yield, and I think it's 1/10 the size of bond, so it's probably about $1,000. I'm not exactly sure, but we can check. Mm-hmm. Tony, see what 10Y is.
10Y?
What the capital requirement is.
Coming at you.
I'm guessing it's...
Let's see, 10Y. Obviously, 10Y. I'm having a little 10YY, so that's why I froze.
It's 10YY?
I believe so.
That's just //
10Y. Sorry. No, obviously no options. You're just looking at the future itself, right?
Yeah.
About $330.
Right. So that's a really inexpensive way. It's 1/10 the size of the 10-year note. And so it's a very inexpensive way. And it's the equivalent 10Y of like about 50 or 60 shares of TLT. But it's cheap.
Right, but no strategic component to it.
No strategic component, just long deltas.
Or short.
Exactly. Let's go to the next slide. Speaking of futures, with micro futures contracts becoming readily available and liquid to trade, we're able to trade them in accounts with a few $1,000s in capital. That's correct. On Tasty, the number of micro futures on Tasty is 23, and the number with buying power less than $1,000 is 9. Mm-hmm. So we at Tasty, we are not. We purposely make trading very accessible for everybody regardless of the underlying, because we want to give you whatever product is most capital efficient. So 23 micro products. And in the drop-down menu in the left-hand gutter or in the center of the platform, you can see all the micro products because we have them listed as micro futures. So you can get a watch list just of micro futures if you want.
Yeah.
Let's go to the next slide, John. There are 3 micro futures with liquid options. Trading iron condors makes these trades very manageable from a capital preservation perspective. MES, MCL, which I would argue that MES and MCL are okay. MNQ is not great. I mean, you can get filled in there because it's the same market makers as the big product, but they just don't watch it that carefully. Mm-hmm. So with 10 Delta Wings, you can do, You can do buying power. You can do strangles for around $1,000, or you can do iron condors for $300. Remember, this is all for smaller accounts. Let's go to the next slide. As a bonus, there are no pattern day trading restrictions when you're trading micro futures, regardless of account size, when trading futures or futures options. Let's go to the next slide. So the takeaways. You can trade commodities and bonds in a small account by looking for products that are liquid and correlated to the ETFs, to the more expensive ETFs. These alternative ETFs can be as small as 10% of the main ETF, which allows for even small accounts to put on undefined risk trades without much capital restraints. With many micro futures products available on the platform, small accounts can use futures to also explore markets that used to be exclusive to large accounts. We have been instrumental, if you're not familiar with the history of Tasty, we have been instrumental in creating small futures products and zero and weekly DTE options. So a lot of that has come from, all that product creation has actually come from Tasty. So we don't get a lot of credit for it in the industry, but they were pretty much all our ideas. So throw that out there, just so you know where we come from. If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.